Hi everybody, Dan Ushman here with TrendSpider, and I'm making this video by popular demand, popular request, to kind of give you a tour of my TrendSpider account, my personal account, how I use the platform, and the indicators that I use the most, of which there are not that many at all. So let me give you a quick walkthrough of how I have things laid out. Right, in my sidebar here, I have two watch lists. Usually for me, one of these contains ideas and the other contains positions. I make extensive use of watch lists, so you can see I have tons of custom watch lists, tons of watch lists generated by scanners. It helps me stay organized. To the right of that in my sidebar, I also have our seasonality widget, which tells you the market seasonality, and it's in all of its default settings. I haven't changed any of them. I have my insider trading widget, which I like to have on my chart, not to look for sells. There's a million reasons why a corporate insider would sell shares, but I use it to look for buys, right? I think it's very interesting when a corporate insider buys shares in the company that they work for, or doubles down on an investment in the company they're already invested in. Finally, below that, I have my TrendSpider alerts. Looks like I have 27 alerts created right now. That's a little bit below average for me. I usually have closer to 50 at one time. But for whatever reason, I just don't have as many positions I'm considering entering right now. So I have fewer alerts in my account. Most of these are watching positions that I'm in, or positions that I'm seriously been watching for a while and am very interested in being in. I also sometimes create multiple alerts on one symbol, right? You'll notice that sometimes as I scroll through here, you'll see the same symbol a few different times. That's because I sometimes do create multiple alerts on one chart. Those are the ones that I'm usually not sure what it's going to do, and I'm using the alerts to help me identify the direction, right? Let me know essentially when the market makes a choice on which way it's going to go. On my chart itself, I'll show you my settings. I have events turned on. Events in TrendSpider are things like analyst recommendations, splits, dividends, and earnings announcements. I have them all turned on. I have my dividends, splits, and earnings at the top of my chart. You can customize this. And at the bottom of my chart, I'll turn volume off to make it easier to see. You can see the analyst recommendations boxes, right? They work just like kind of volume bars, except if you hover your mouse over them, they'll tell you which analyst is behind that action. Because I can have this on my chart, I don't need it in my sidebar, but there is a pretty robust widget that you could put in your sidebar if you wanted to, that would give you the same information in a different way. On my chart itself, I only have a handful of indicators, right? I'll walk you through each of them and tell you why I have them. The first one I'm going to point out is volume profile, or in TrendSpider we call it anchored volume profile or anchored volume by price. This is one of the most powerful indicators, and it has changed my way of thinking about charts and thinking about trades and thinking about the market. In some pretty meaningful ways, right? Like I look at things differently now. And this is also where the infamous term that Jake talks a lot about in his videos, the volume shelf, comes from. This is a volume shelf right here. You can see it right here. I'll draw a little line to point to it. I'll put a little arrow on it for you guys, right? And this is another volume shelf down here, right? And you can see that these are essentially formed by price spending time in a particular range, right? When price is trending, like it is here, right? You can see from like 37 to 38.50 or so, right? Really the high 36s. Pfizer, which is a real trade that I'm in right now, right? During this area here, there was not a lot of volume. Price was trending during this time. It was moving. Right. This is what a lot of people talk about when they say low volume moves, right? There was not a lot of actual transacting here. But what a lot of people don't understand is that lack of supply, right, creates both this gap in volume and this big move, right? It's actually bullish, in my opinion. It means that people who could be selling are holding, right? They're not releasing their supply. And as a result, buyers are being forced to chase the price up and push it up. They're hitting that ask, right? There's no sellers hitting the bid, and that is something that you see in stocks that are in an uptrend. So what happens after we trend for a while? We have to consolidate, right? We all know markets consolidate, right? So you end up with this sideways, downward slanted price action, right? And this is price consolidating, consolidating. And the more time it spends consolidating, the more volume it builds in that area. This is real transactions, right? These are real trades. People who are in them to make money, right? So as long as price stays above that volume shelf, right, they're likely to add to their positions when it gets closer to it, right? And they're only likely to start panic selling if price breaks below it and their positions go too far into the red and start triggering their stops. So it's very interesting how the supply dynamic works out. But again, price trends on relatively low volume, then it pulls back and spends time in a particular range, which forms a volume shelf, which forms a intermediate short-term floor for the price, right? Every dip gets bought down or bought up, right? And ultimately, there's just not that many sellers left, right? People looking to get out from this big move had all gotten out. Lots of other people got in, and that ate up that supply, and now we have a breakout, right? It's a very clean and nice breakout, right? It's kind of like a gap and go, a giant candle, And there's been a lot of news about Pfizer lately with the vaccine and all that stuff and their various COVID treatments that is propelling retail interest into this name, right? And it's just kind of funny to me how the technicals and the fundamentals in the news story tend to align quite a bit. So what else do we know here? Well, we know that when Pfizer bottomed out back in February, momentum on the ultimate RSI indicator was banging up against the lower Bollinger Band. Remember, this indicator is literally just RSI with some fancy coloring rules to it in a Bollinger Band. Right? It's a very simple indicator. It measures the volatility of momentum. And you can see that the volatility of momentum expands and contracts, right? It expands when price is trending, right? When it's moving in a volatile way. It contracts when it's consolidating, right? It also tends to align, right? Like for example, here, where I just drew this blue vertical line, you have price essentially peaking out. Actually, it's on the next candle, right? But you have price capping out and beginning its consolidation at the same time that ultimate RSI is tapping against the top Bollinger Band. A lot of people would say price isn't oversold, or RSI is not oversold unless it's above 80. It's not oversold unless it's below 20. It's not overbought unless it's above 80, right? I don't think of it that way. I think of these Bollinger Bands around my momentum indicator, in this case a 10-period RSI, to be my overbought and oversold levels. As price approaches that bottom half of the Bollinger Band range, as approaches that lower band, right, that's when I start to think it's oversold, right? And that can occur anywhere in the RSI range, right? It's an oscillator, so it goes 0 to 100. It can be anywhere there. It can, be oversold when it's trading at 58. We're printing 58 on the RSI here, right? It's oversold to me because it's near this lower Bollinger Band. I then oftentimes like to look for divergences, right? There's not a ton of divergences on Pfizer, so I'm not going to spend a lot of time on that on this particular chart. But when I see price run and touch and continue touching and kind of ride the upper Bollinger Band of momentum, I know it's only a matter of time before it starts to consolidate, right? And the more time that I've noticed, at least, that it spends playing with this upper Bollinger Band, the RSI, the sharper the pullback will be, right? And you see this happen time and time again. You have this run right here, right? Eventually, you have a horizontal consolidation, right? That continues for a while, right? I mean, this is from March until, I'd argue April, about a month of time that price was consolidating before the next run up here, right? Which, happened pretty quickly, right? It started April 9th, ended on April 21st, right? That's like 2 weeks-ish, right? Not even, right? It ran along this top band again, and now it has pulled back. all right, into this lower quadrant. And then here's how you know, it's, or at least how I think I know, it's going to keep running for a bit, right? It broke out off a volume shelf, and you have it popping above the middle band, right? The RSI is above the middle Bollinger Band here, and there's still plenty of room, right, for it to move up to this top band here. So I use these two indicators together quite a bit, right? Ultimate RSI and volume profile. There's one other indicator that I like to use, and that is anchored VWAP. And anchored VWAP is very, very similar to anchored volume profile, except there's one really interesting thing that you can do with it called the handoff that I'm a huge fan of. And before I talk too much about this indicator, I do want to give props to Brian Shannon, right? A trader who I really respect. Definitely go buy his book. It's called Trading with Multiple Time Frames. I'll put a link to it somewhere in this video description. But he's the guy who has popularized anchoring. Has been around for a long time. But the idea of anchoring it at a particular point in time and allowing it to cumulatively accumulate data, starting at that anchor point forward, is something that he's definitely been the loudest advocate for. And I think it's absolutely brilliant. And what that lets you do is this thing called a handoff. So first thing I do is I anchor a VWAP at the highest high, right? And then I look for where price breaks above it, right? And it broke above it here. And then this candle, the next candle, is the last candle to touch this anchored VWAP, right? That I anchored at the high. So I anchored another one there, right? And that is my handoff point, right? That is when price and the previous VWAP last intersected, and that is the place to anchor the next VWAP, right? And this is where it starts to get really, really interesting, because even without the volume profile on your chart, you can see that right here, right, this handed off VWAP from this last VWAP was exactly where price pulled back to, tested, and then ran from. And you see this a lot, right? You saw how hard it was for price to break above this anchored VWAP here, right? This guy, right? It struggled in this area for quite a while, right? Like the struggle is real right here, right? This is, more than a week of time that, it fought and tested this 1, 2, 3, 4, 5, arguably 6 times, pulled back a bit, scared everybody, triggered a few stops of people who bought up here, and then from there popped and ran, right? I don't think, it's totally natural to hand off VWAPs, right? Because naturally, you really want to anchor them at major swing highs and swing lows, or year to date, right? Or on earnings dates or gaps, right? But this I found to be one of the most predictive and effective ways to do it. And it makes sense, right? Because once price broke out of here, right, it started a new trend, right? And you have a lot of confirmation of that trend, right? In both the momentum of the stock and also the price action. So being able to identify a level to trade against is important. And this particular VWAP, this smaller one here, is also where my risk alert is set for this name. So I'm long Pfizer. I have calls in it. I don't have common anymore, although I have traded common in Pfizer quite a bit in my trading career, right? But right now I'm long calls, and I want to manage my risk in it, and I'm pretty into green, right? My position is looking pretty decent right now, right? And I don't want to go to zero, right? And I understand there are options, so that, volatility can destroy them, right? But this will keep me out of trouble, this alert. And this also does one other really good thing for me. It spares me from having to stare at this chart all day long, right? Which is something I don't like doing. I don't think it's cool to sit there and have, charts surrounding you, because you can't pay attention to that many charts, right? And I happen to have quite a few positions open, and it's difficult for me to pay attention to one, much less, 20 at a time, especially when things get a little volatile. So I use alerts to watch the chart for me. And that's basically the gist of it, right? So just to recap, I really like to use volume by price. I like to use this to identify possible volume shelves, right, that might be forming or may have formed. I like to use anchored VWAP, primarily to manage risk, but also, I use these indicators all in a variety of ways. And I like to use this derivative version of RSI called Ultimate RSI, because it gives me a different and, in my opinion, far more reliable and useful way to measure when price is becoming overbought or oversold. And I can still do the other things I like to do with RSI, like look for divergences, even with this as well. So those are the three main indicators I like to use. There's one other thing on my chart that you may have noticed, and that is this lower chart along the bottom of my screen here. And this is a raindrop chart, right? TrendSpider has an indicator called compare price. And you can set this indicator up to show the same chart, but a different chart type. And I really like to keep a raindrop chart on my screen, especially when I'm looking at opportunities for trades. And the reason for that is I like to look for divergences, right? That's when a raindrop is blue, right? When on the chart up here it's red or green, right? Or a raindrop is green when something on my chart is red, right? Because when that happens, I've found, and this isn't like a hard and fast rule, but I've found that it's more likely than not that the raindrop will be right. The other thing I really like to use about raindrops is they help me tell if a breakout is real or not, right? I can tell this Pfizer move is legit, right? It's a real breakout because all the volume is at the top of this range, right? Like the majority of trades that occurred on Pfizer occurred in the second half of the day, occurred close to 39 bucks, right? They didn't occur, at the bottom of this range at 38.90, right? They didn't occur under this, right? They occurred at the top. That is buyers smacking the ask, right? They're buying it up. And the raindrop makes it very clear and easy to see that. So I do like to keep that at the bottom of my chart, right? I like to compress it really small so it doesn't take up a lot of room, right? I like to have my RSI a little bit bigger because I look for divergences. And between those two and just the price action, and anchored VWAP is the majority of how I trade. The other thing that I didn't touch on here much, and it's a big part of my system, it's just there's so little time here, is I do make heavy use of trend lines, right? And horizontal price levels. I usually trigger my entries off a pullback to a trend line support or an anchored VWAP support or a volume shelf. But there's a variety of different ways to identify support and resistance, and I try to use a handful of them, right, in conjunction with these particular indicators and my raindrop chart at the bottom and TrendSpider alerts to kind of keep me grounded, right? Keep me following my own rules, keep me from getting emotional, especially alerts in that sense, because alerts will spare me from having to stare at the chart. And when you watch something for too long, that's when you start to make emotional decisions out of boredom or anxiety or whatever it might be. So I'm going to cut it off there. I hope you guys found this to be interesting to kind of learn a little bit about how I personally trade, how I personally look at charts. Pfizer is not my typical trade. I usually try to trade lower, right? I try to pick bottoms. I'm fairly decent at trading reversals, and that's my favorite style of trading. But when I see something like Pfizer here, I have to play it because it's a pretty high conviction setup for me. I hope that you can use the info you learned here, that hopefully you found interesting, right? But I hope you can use the information that I shared here to inform and make your own trading system, right? My style is different than a lot of other people's, right? It took me a long time. I mean, I've started trading in 2008, right? It's 2021, right? And it took me a long time to discover this, to understand it, right? To really truly internalize it. And that is, I think, one of the things that makes a big difference, right? If you're a trader who follows other people's techniques, other people's alerts, other people's signals, other people's charts, you may do okay for a while. What happens when that hand that's feeding you goes away, right? You're going to be left to sink or swim on your own, and that's why I really advocate that you take it all in, right? Learn from other traders, right? But don't exclusively learn from anyone, and take the info that you learn from as many sources as you can, right? And internalize it and experiment with it yourself, and identify your own strategy, what works for you, right? Because I promise you, what works for me probably won't work for you, and what works for you probably won't work for me, and that's part of the nature of this game. So thank you again for listening to me ramble. I hope that you found this to be helpful, and that's about it. Have a great day.